Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. Hope you're doing well today. And if you're new here, every Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee. Now in today's episode, we'll be talking about Bitcoin and Bitcoin's price, the CFTC's enforcement action, DeFi, and of course our usual 404 Logic Not Found segment. But before we get into all of that, like we do in every single episode, let's start with some questions from the community from YouTube and Twitter. So I'm going to pull those up here on the screen now on my computer. But if you want one of your questions answered, please do leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit the bell notification button so you can get a heads up whenever I post new stuff here on the channel. Thank you in advance for that, and let's go ahead and dive into these questions. Now, the first question is from Neil Patel. Hi, Hashoshi, love your channel and comments on blockchain and crypto. Thank you. Quick question. There's a bipartisan bill which was introduced to take crypto exchanges and crypto here in the US to be governed by the CFTC as opposed to the SEC. What are your thoughts on this? We're going to be talking about the CFTC's enforcement action against BitMEX a little bit later. And so that, I think, gives a little bit of context to this answer. But honestly, I think that the SEC and the CFTC have generally some overlap. I think the CFTC, if you look purely at the definition of what they do, probably is a better fit because not all cryptocurrencies are securities. But again, even that is a very murky puddle to look at, right? We don't really know what these things are classified at because there is zero regulatory clarity in terms of how this is treated. The reality is it's probably about the same regardless. The CFTC and SEC will probably approach things very similarly in terms of enforcement. And of course, enforcement is brought in tandem with the DOJ almost all the time. I'm pretty sure they have to work with the DOJ to bring really any enforcement actions from in terms of the legal action, I suppose. So I don't think it really matters which organization does it. I think the more important thing, if we really talk about regulation, of course, everyone is going to hate on me for saying this. Either regulatory clarity needs to happen or we're going to have a really big issue, because when you have, I guess, legal precedents being set as a result of illegal actions or big issues that come up, usually those are a little bit less I guess, collaborative, if you want to put it that way, between the community and regulators. And so whatever you feel about regulation, I get it, whatever. But the reality is that the perfect storm can be brewed for bad regulation when it comes to, I guess, criminal investigations, creating new precedent and subsequently laws. So honestly, it's a mixed bag. I'm not sure what's going to happen, but thank you, Neil, for your question. Kevin Small, second question of the day. What are your thoughts on the boom in NFTs and the website Rarible? So I don't have as much experience with the website Rarible. I know that it's sort of like an NFT marketplace, if you will. I think there are a lot of these marketplaces cropping up, and it makes sense because NFTs, or non-fungible tokens, basically crypto collectibles, are a huge burgeoning space. I think that NFTs are going to be one of the major players in bringing adoption of cryptocurrency to the mainstream. I think a lot of markets like the trading card market, the game item market, the collectible goods market like memorabilia, experiences at sporting events and venues, these things are going to move to NFTs, and that is going to be one of the things that brings normal everyday people that don't really care about crypto into the crypto space. It's going to get them a wallet. It's going to get them involved in collecting things. It's going to get them engaged in the space. And so I think that this boom in NFTs is coming at just the right time. And I think it's a huge thing that we should be supporting as a community, helping create content to get people involved. And I do think that this is also a great opportunity for networks that are more scalable, like the Flow network that's built by Dapper Labs, like Phantasma, etc., to really make a splash in this market with NFTs and start to grab a little bit of market share from Ethereum. So hopefully that answers your question. Thank you so much, Kevin. I've got a question from Swoops here. You touched on this topic in a video, and I thought it was interesting. In your opinion, what is the best way for a chain to lure developers? This is a great question, and it doesn't have a direct answer necessarily. I think the best way for you to lure developers, first of all, is to give the clearest path towards creating a product that has value, right? And when you say clearest path, what does that mean? It means the documentation for how to set up an environment where you can test things like a test net or a local test net, or setting up your SDK to interact with an app and a blockchain to sort of serve as that connective layer. How easy is that to do? If the documentation is good and the SDK works as it's expected and all the interfaces are documented, etc., that's a good thing, right? Developers need documentation, or else it's not worth the effort to try and reverse engineer what's been built to interact with the blockchain. That's the first thing. The second thing is there a developer evangelist community? Is there a group of people that is there to help connect the dots between maybe the engineering team on the chain side versus the engineering team on the developer side? Maybe it is to set up a grant program, right? To give money and incentivize developers to build something on your chain. But I think most of all, it is being problem oriented and saying our network is uniquely positioned to deliver this value and to create an environment to build this type of app. And then developers will start to come. Languages, I think, are a little less important. Yes, it helps if you're, natively able to script in Python, and there's a lot of Python developers. That makes a difference, but far less than the other intrinsic things. Finally, are there users? A chain should be focused on bringing in users, and it becomes a chicken and egg problem. You say we need developers to build dApps to get users, but you need to get a seed group of users first to get the first group of developers in, which then feeds new user growth and then brings on more developers. That is the challenge, and I think that is the way that you have to do it. And of course, easier said than done, but that will be what decides which chains win and which do not. And so some of that is marketing. I know a lot of people in this space hate marketing. They say, why are you going on a channel and talking about, your project? Some of that has to happen. So I think that is also something to think about. But great question, Swoops. Now I have a question from a name that, quite frankly, I don't think I will ever be able to pronounce, but I'm going to try. Dravko Zeprianov. Hopefully, maybe that was right. Which cryptocurrency do you think has the biggest chance to be a global payment method? This is, again, a really interesting question. I actually think that there will not be one standard global payment method. I have a feeling there will be these interoperability networks, the Cosmoses, the Polkadots, etc. of the world, will start to reconcile transactions from multiple different networks as people do different things within the value chain. We're going to see these different blockchain networks start to niche down and then say, we're going to leave these use cases to this other network. We're going to take this sort of bucket of use cases. And then we're going to start to see, payments going between these sort of interoperability layers from chain to chain. That's what I think we're going to have. If you talk about payments, you probably are thinking about, I guess, things like Bitcoin, right? Can Bitcoin be a payment method? In its current state, no. Bitcoin is not going to be a global payment method. Global payment methods require just a very different suite of features than Bitcoin has. I just don't think it works that way. With a layer 2, that isn't necessarily the current state of Lightning. I don't think it's the right thing. With an L2, it could happen. But I do think there are cryptocurrencies like Digibyte, etc., that are fantastic daily transactional, use cases. They have great fees, super fast. So things like that. I can't give you an exhaustive list, but I don't think there will be one to rule them all. Hopefully that answers your question. I know that there's a lot of nuance to that question, but it is what it is. Thanks so much for your question. And hopefully I did not butcher your name too badly. So with that, folks, let's dive into the news section of today's episode. And I've been kind of creating this theme here, but in partnerships with the folks over at Cobo who make the awesome Cobo Vault wallet, I will be giving away a Cobo Tablet Plus Steel Seed Phrase backup device in every single episode of Crypto Over Coffee from here on out. So make sure you stop by every week. And all you have to do to enter the random draw is to just post a comment down below in the video, and I'll pick a random winner every week. And just for transparency, this product is only available in the US, Canada, and Europe right now. So if you win and you're from another region, I'll just send you some BTC instead. I did that for last week's winner. It worked out just fine. So The winner of today's giveaway is here on the screen. Here's the random draw. So a big congratulations to the winner. I will reach out to you directly via the comment. And now that that's out of the way, let's dive into the news. So it's almost a rite of passage now to kick off the news section with some Bitcoin analysis. So let's just keep that going now. First and foremost, this week has been pretty uneventful, pretty much for the most of the week in terms of the price of Bitcoin. After the crashes of the weeks past, we've seen sideways trading mostly, but strong support in the mid 10K range, which has been good to see. And I think this is a good level personally to hold support at. And a lot of the traders on Twitter, if you give their opinion any weight, seem to be pretty widely of the mind that if Bitcoin found support above 10,200-ish or 10,300-ish, we would be okay in terms of moving forward and how bullish, I guess, these traders were. I hope that's true, but I'm not a trader in that regard. Now, there are two major bull cases floating around online right now, but only one of them is really backed up by any substantive data. Firstly, the less data-driven measure is the idea that the second stimulus check in the US is coming. People believe that the stimulus check means that A, the dollar will again be weakened, which is good for Bitcoin, and B, that the stimulus money will flow into Bitcoin as people invest it. The latter is the one that I'm not sold on personally. People are struggling right now, and despite the soundness of the investment that Bitcoin might be to many people, I think many, if not most, will be using this money to pay bills, to feed themselves, to take care of their obligations, which that's what it's intended for. I don't know that this means definitively that money will flow into Bitcoin personally, and I don't know that the dollar will necessarily be weakened the same way that we think it will be. The other metric that is backed by statistics from Glassnode, though, is that we are seeing new entrants into the Bitcoin market in pretty reasonable volumes, which is a really good sign. There are a variety of reasons this could be happening. One would be those drawn into DeFi from externally are now moving out of DeFi and into Bitcoin as sort of a safe haven investment or hold from now on, as well as those coming into the realization that they want to diversify into gold and other assets during currency debasement. So these are more like brand new retail investors. Now, this is indeed a potentially bullish case, but there is a major issue though. The recent enforcement by the CFTC against BitMEX for illegally operating a derivatives exchange in the United States is going to likely take some wind out of the sails for the time being. Don't panic. I'm not saying to panic, but I would quell your bull run expectations, especially as this BitMEX thing unravels, and especially if withdrawals from BitMEX start failing. BitMEX is a major cog in the Bitcoin markets, not the only, but one of the bigger ones. And so that brings me naturally to the next story, which is really just about that. The U.S. Commodity Futures Trading Commission, or CFTC, along with the DOJ, charged BitMEX this week, the popular derivatives exchange, with operating an unregistered trading platform and for violating anti-money laundering regulations. This is, of course, because it is well known that U.S. traders use this platform, and platforms that lack basic compliance with U.S. rules where U.S. traders are trading are going to get scrutinized. Now, there were rumors circulating a while ago that after a ban of BitMEX in the US traders were easily able to use the platform anyway, which prompted investigators to take a look. Of course, we had no confirmation that investigations were happening. Now, I don't know that this is true or not, but it did trigger some concern in the community back then. Now, today, this seems to make sense in context, as the CFTC has brought these charges along with law enforcement against many of the leaders of the exchange. Now, at minimum, to even hope to avoid potential regulatory scrutiny in the US, one's platform must check basic compliance boxes like KYC, anti-money laundering procedures, and registration with the CFTC, among other things. I'm no expert here. Any entity that does not meet these compliance requirements and also does not provably make efforts to prevent US persons from using the platform is at risk for enforcement actions, from my understanding. Now, I'm not entirely sure that a platform can prevent every single case where a US person tries to gain access to the platform, but I think that the rule is there has to be controls in place. I don't know what the requirements are specifically, so I can't elaborate there, but that's just my initial thought. And there's so much to unpack from this news, I don't even know that I can express it all. On one hand, this could mean that the ETF for Bitcoin that we've talked about for so long could come to fruition, as again, the rumor is, and it's just a rumor, that BitMEX was the major roadblock in terms of that ETF passing because of the supposed manipulation that happened through BitMEX. On the other hand, this could very well indicate a precedent for enforcement against exchanges, both decentralized and centralized, that share characteristics with BitMEX. Now, I suppose the difference is that BitMEX was a centralized exchange, so it's easier to build a compliance case at individuals, but I still think there could be scrutiny on decentralized exchanges in terms of who runs the gateways, who built them, etc. Now, it's all hard to say for sure and what this means, but this is significant news that I think the whole community will be following. Now, in other news, the anticipated Atari coin made by the gaming legends at Atari will finally be reaching public sale in early November through the Bitcoin.com exchange. Now, this Atari coin is not widely studied, and there are lots of questions about how it will be used and exactly what it looks like. But one use case that I've seen that I find quite interesting is the idea of gaming finance. Essentially, the Atari coin could be used for a DeFi construct to basically pool funding for in-development video games, whereby those who pool funds will get a share of the revenue for the game's sales and purchases after launch. So that's pretty cool, and I would definitely be interested in participating in something like that. I can also see this being used as a general payment method for in-game purchases, and of course for integration with NFT constructs for in-game items down the line, but we shall see what happens. Unfortunately, though, this sale will not be available to US investors and probably many other regions due to compliance, but you can check your local laws to determine if you can participate. Interestingly enough, there was also one more thing about Bitcoin and other proof-of-work cryptocurrencies that I saw that I thought was pretty interesting. But first, a little coffee break. Sorry about that. Now, according to a report by the University of Cambridge, 76% of miners have some form of renewable energy or renewable electricity in their overall mix. Furthermore, it showed that nearly 40% of all energy used by Ethereum, Bitcoin, Bitcoin Cash, and their POW cousins came from renewable sources, which is, of course, way higher than the media would indicate, as of course they tell the world that crypto is a danger to the environment. Now, quite frankly, this also shows a trend towards renewable energy in places where significant mining is occurring. And this is great to see. It removes one of the major detractions or challenges from proof of work that the haters love to write about, especially when it comes to Bitcoin being an environmental disaster. And what I'm looking to see next time this same report runs is that the trend towards renewables continues for networks that still mine with proof of work down the line. So fingers crossed the renewable energy trend continues. Now, I feel it necessary to mention this now, as of course there's yet another potential opportunity for folks to get burned yield farming in the DeFi space. But the hot new project APY Finance has gone through funding rounds already with VCs, and it's launched now, and already it has $70 million, or at least it had $70 million of stablecoin value locked up within just hours of launch. Now, here's the deal. Basically, APY incents users to contribute liquidity in the form of stablecoins locked in the platform, and then rewards them in the native APY token. Now, I'm not saying this is a concerted pump and dump scheme or a purposeful scam, because I don't know that. But what I want to draw attention to is the fact that there was a multi-million-dollar pre-sale. I think multiple rounds of a pre-sale too. So there were probably a select group of people who got in really early before anyone ever had a chance in the normal retail market. Now, the average retail DeFi user, by that same hand, did not have the opportunity to buy tokens at those low prices. And as such, be ready for a potential dump as this builds hype. And usually it's the retail investors that get in late that are the ones caught holding the bag. So please be safe out there. Do not go all in on these brand new projects. It's just not worth it. So this is a textbook case of risk management. Now, it is time for 404 Logic Not Found. And for those who are as of yet uninitiated in this little firecracker of a segment, I basically highlight tech-related fails or stupid moves in the world that need to get some attention. And of course, speaking of attention, if you want to help this video right here get some attention from the YouTube algorithm, please do hit that like button and get subscribed, because it tells the YouTube robots that you're liking what you're seeing and you want to see more of it. So thank you so much in advance for that. And we've got a pretty interesting one today. Now, Coinbase CEO Brian Armstrong took to email to address his employees recently after a long-winded blog post about the mission of Coinbase and changes to the culture of Coinbase. And in this email, he essentially made it clear that if employees were unhappy with his new definition of the mission and operating rules of Coinbase, that they can basically take a walk and collect their severance package. Now, at face value, you might be thinking, okay, Hashoshi, yeah, I mean, that's his right to do. He's the CEO. He wants to, reorient the mission. And you're right. Armstrong has every right in the world to do this. From changing the mission to telling people that they can see the door if they don't like the mission, he's allowed to do this. No question about it. My issue is what this says about what was the mission at Coinbase, which was to truly create an open financial system and to allow people around the world to exchange local currencies for digital currencies that made their lives easier, made their lives better, etc. In that mission, there was a deep-rooted politicism, a social cause, an opinion. And it seems that Armstrong is now backing down from that. And to me, one quick way to destroy company morale is to tell all of your people who are each wildly different and have wildly different opinions to essentially close their mouth and check their beliefs in at the front desk. Or that if they want to have opinions and they want to talk about those opinions, to just head to the exit. The world is not apolitical. Heck, the crypto space itself is not apolitical. And it's my opinion that this move from Armstrong at Coinbase shows how generally lost the original ethos of Coinbase really is. And I don't think it's really rooted in reality. Nothing is going to change if we ignore the divisions and differences in the world, especially between each other as people. Now, it's a case study of how billions can corrupt even seemingly well-intentioned companies in the space. But of course, not being a hypocrite, I do realize that this is merely my own opinion about this situation and about that Armstrong's actions, I suppose, were not correct in my opinion. So you might believe otherwise, and I respect that, of course, but for now, it's a 404, logic not found. Now, in terms of NFTs, a big release that has hit the public recently is the NBA Top Shot beta made by CryptoKitties founders and creators Dapper Labs. Following the unbelievable popularity of CryptoKitties on the Ethereum network, Dapper Labs has taken to their Flow blockchain to work on an officially licensed NBA, non-fungible token collectibles, tradable ecosystem that is both scalable and fun to play. I guess you can say play. The public beta of this ecosystem just launched on the Samsung App Store, and it allows users to collect packs of NBA moments, which are basically multimedia elements representing iconic moments in basketball history that have varying levels of scarcity and rarity, making them more valuable. Now think of these like NBA trading cards, but multimedia instead of pieces of paper. Now, for example, the collectible version of LeBron James's Cosmic Dunk sold in a trade for over $5,000 recently, giving credence to the value assigned to these tokenized collectibles. Now, we talked about this in Q&A, but I've seen all sorts of criticism about NFTs and collectibles on chain. Like, people don't get it. People say, well, they're just multimedia images. Anyone can steal them, copy them, just look at them without paying. What's the big deal? It doesn't make sense. I mean, I myself can photocopy a trading card that cost 1 cent to make and look at it all I want, but it's not going to be worth anything. It's just a picture. Beyond that, that 1 cent piece of paper trading card, the original that I photocopied, could have thousands of dollars of value based on its rarity or utility. Now, this concept of collectible value being far, far, far beyond the value of the medium, the paper itself, whether digital or physical in this case, is not new. NFTs are the new trading cards, in my opinion, and will represent a natural digitization of collectibles in the future, but I guess we'll just have to wait and see. I really do think that this is the future. Now, I did want to mention today's episode sponsor, Prime XBT. Now, for those in supported regions in Europe and Asia, Prime XBT is a great option for a wide variety of market trading, including cryptocurrency and S&P 500 indices. I've mentioned this before as well, but please do bear in mind that this is not available in the USA and Canada. So folks in those areas, please do not try and sign up. One of the features that makes Prime XBT an appealing option for traders, though, is the new Covesting module, which allows one to copy experienced traders' trades over a period of time with your own funds. Now, in my mind, this is a great opportunity for newer traders to learn how much more experienced folks do manage risk and make trades on a platform like Prime XBT. Now, to get the most out of this feature, it usually would make sense to first watch from the sidelines to learn the ropes and to find a list of traders that one would trust, and then spread risk across several. Don't put your eggs in one basket. Of course, remember that even experienced traders make mistakes, and this is not risk-free, but it's just yet another tool in the toolkit to trade without having to make every decision on your own. And of course, PrimeXBT now offers this Covesting module for folks in supported regions. Now again, if you want to utilize a variety of trading services across a wide variety of markets, check out PrimeXBT and always utilize and understand good risk management, and do not use leverage or margin unless you are aware of the risks associated with it. Now, for fans of Cardano and Tron, you can now use the brand new staking as a service feature on the popular exchange service eToro. Now, eToro now allows holders of ADA and TRX and even more cryptocurrencies to come in the future to earn monthly staking rewards of around 75% staking reward yield. This means that essentially you get 75% of what you would earn if you did the staking yourself, which I, of course, recommend to anyone and everyone who wants to stake. Just do it yourself. However, I am aware that there are plenty of people who like to actively trade and keep their crypto on exchanges, or simply don't want to bring their crypto onto a wallet and deal with it. Even though I disagree with leaving crypto on an exchange, if you're going to do it, then why not earn some stake whilst doing so? And if you do want to stake on your own but haven't done so, it's a pretty simple thing to do on a Ledger Nano hardware wallet of some kind, or even a desktop or mobile wallet for the cryptocurrency in question. So I would definitely urge you to give it a try. There are tutorials all over the internet about how to do it for your favorite cryptocurrencies. It's really, truly not difficult to do. You can maximize your rewards by doing it on your own. Now, folks, with that, I wanted to say thank you so much for watching this episode. And if you have time to stick around, I did want to link up this video here about my top 3 favorite VPN services that you can use to protect your internet traffic. I'll link that up here on the screen. But as always, I am very, very happy and thankful to have you here watching my videos. Thank you so much. And I wish you and your family a wonderful weekend and week ahead. And until next time, cheers.